Leverage has had an impact across the board in today's market, and it's really the root of all the problems we're having. We saw many businesses over-lever, so that means they were borrowing money to keep their operations alive and hopefully that the business would emerge. We saw the banks use too much leverage in terms of how much they're lending. And finally, and most importantly, we saw consumers take on too much leverage, borrow way too much money. And when all of those factors are combined, that when it's time to liquidate and actually pay off those debts, there are very few buyers out in the market. And that's exactly what we're seeing right now. In terms of how to, when it's a smart time to use leverage or how to use it in an intelligent way, you have to think about it as living modestly so that you don't just sort of extrapolate things in a linear fashion and think that it's always going to go in the same way and history is going to repeat itself. You always have to ask yourself, if things go poorly, how much of a loss am I going to take? So that instead of leveraging yourself to the maximum amount, you can take on a modest amount of leverage. So even if it does go poorly, you're not going to be wiped out. And that's what people forgot and lost sight of, is that they're not looking at the downside. Individuals and corporations alike. Corporations kept believing that the capital market would always be open to them. They could always raise additional financing, they could always borrow more money and keep the businesses going. And it's those businesses right now that are extremely vulnerable. You have to remember that these businesses, these numbers that you see trading represent businesses, and these businesses are not going to go out of business. There are a lot of solid businesses out there that have cash on the balance sheet, no debt, and continue to manufacture products or services that everybody needs, and they're going to continue to need. You can think about insulin producers. Do you really believe that people are going to stop using insulin next year? What about medical devices? Are they going to have less heart surgery in the next little while? So anything in those types of spaces. And that's what you have to ask yourself. So look at the strength of the balance sheet for the corporation and ask yourself, what is this business doing? And you'll see that there are a lot of businesses that are very, very cheap in this market. So the days of low rate financing are finished. And for consumers, this is going to be a big change for them. They're not going to be able to finance those purchases easily, and they're going to have to live humbly, just like many of our parents did after World War II. They had to live humbly, and they realized that the good times are not going to be there. And the focus is very, very much on risk rather than living it up. Even right now, you can see right now that things are changing. All of a sudden, savings rates have gone way up. The amount of outstanding credit continues to go down. And this is going to change, and hopefully for the better. I'm quite optimistic that as this passes, that we'll be on a much sounder footing for the entire economy, and the recovery that takes place from here is going to be long-lived and quite solid.